Okay, so we have our first question. This one is on the cash settlement. Mariam PLC. On 1st April 2018, Mariam PLC granted 500 share appreciation right into bracket SARS to its 300 employees. All of the rights vested on 31st March 2020 and can be exercised from what? From 1st April 2020 up to 31st March 2022. At the grant date, the value of each SAR was 10 cedis, and it was estimated that 5% of the employees will leave during the vesting period. The fair value of the SAR is as follows. End of 31st March 2019, fair value is 9, 2020, fair value is 10, 2021, fair value is 12. All the employees who were expected to leave the employment did leave the company as expected before 31st March 2020. On 31st March 2021, 60 employees exercised their options when the intrinsic value of the right was 10.5 and was paid in cash. Mariam PLC is, however, confused as to whether to account for the SARS and the IFRS 2 share-based payment or IFRS 13 fair value measurement, and would like to be advised as to how the SARS should have been accounted for from the grant date to 31st March 2021. Advise Mariam PLC on how the above transaction should be accounted for in its financial statement report with reference to a relevant international financial reporting standard. Query the question here. When you look at it, look at the date. On 1st April 2018, Mariam PLC granted 500 appreciation rights. So here, 1st April is when? Is the grant date. All the rights were to be vested on 31st March 2020. From 1st April 2018 and 31st March 2021. How many years? So all the rights vested on 31st March 2020. So here, he didn't give you in specific. You have to deduce and know the vesting period. Because when you look at it, they say, and it can be exercised from 1st April 2020 to 31st March 2022. When we say, and it can be exercised, it means they will have the right to the claim of of the shares. That's what they mean. So it means they have how many years? From 1st April 2020 to 31st March 2022. That means they have 2 years to exercise that right. If they are exercise, they can exercise their right from 1st April 2020, from 2020 going, and they've given you the grant date is 1st April 2018, and the right to invest, right to vested period is 2020. How many years, or how many years is the vesting period? Or what is the vesting period here?
It's 2 years.
Thank you very much. That's what I want to know. It's 2 years because from 1st April 2018 to 31st March 2020, 31st March 2019 is year 1.
Will be 1.
So from 2019 April to 31st March 2020 will be 2 years.
2 years.
So that is it. So you've understood it right. Follow here. At the grant date, the value of each SAR was 10 cedis. What does it mean? This is share appreciation right.
Appreciation.
It's how much? 10 cedi. What does it mean? What does this 10 cedi mean? So that's a grant date fair value of the share. It's 10 cedis. Okay. That's what it means. And it was estimated that 5% of the employees will leave during the vesting period. What that means is, listen very, what that means is that every vesting period, 5 employees will leave. 5% employees will leave. That's what it means. Okay. And they've given you fair value of share appreciation rights as follows. So is this one equity or cash settlement?
Yeah, this is cash.
Thank you very much. So it's cash, so you have to rely on the fair value of the fair value of the shares. All the employees were expected to leave the company as expected before 31st March. What they want to mean is that they've given you they said that 5% of what? Of the employees will leave during the vesting period. The vesting period is what? Year 1 is a vesting period and year 2 is a what? Also a vesting period. The vesting period are 2 years, and they are projecting that 5% employee what will leave in the vesting period. It means year 1 you need to calculate 5% less projection, 5%, and year 2 you need to also calculate your 5%. In normal sense, year 2, which is the final vesting period, we don't do projection of employees leaving. We don't. Assuming they didn't make this statement, all employees who were expected to leave the employment did leave the employment as expected. If they didn't make this statement, you realize that the final year, which is year 2, we wouldn't have any employee leaving. We wouldn't deduct anything from the total number of employees. We wouldn't.
Okay.
Like we wouldn't deduct any 5%. No, we wouldn't. Assuming they are salary, they didn't say anything. We will only calculate estimated 5% in year 1, and the final year, year 2, we wouldn't calculate anything. It means the final year, nobody left, and we don't do estimation also in final year. So final year will be the total amount of employees without any deduction. But this one, they've made it explicit that all the employees who were expected to leave the employment did leave as expected in the final year. So it means they projected that 5% of the employees will leave in year 1, vesting or final year vesting period. Because we don't do projections, we would have left that place without deducting any estimated employees leaving. But here they are telling us that the people who expected to leave did leave. For that reason, the 5% estimation that they made in year 1, in the final year, indeed, this 5% employee left. So you realize that the final year you will bring this 5% because they did leave. So all the employees who were expected to leave the employment did leave the company as expected before 31st March. Now, on 31st March 2021, 60 employees exercised their options when the intrinsic value of the right was what? Was 10 cedi 50%. What can you say about this? And the cash was paid. What can you say about this? This sentence, 60% exercised their option when the intrinsic value of the right was 10.5 and was paid in cash. How do you understand this?
That is what the holder will gain.
Okay, they will pay. Okay, they will pay. The holder will pay 10 cedis on the what? On the total share appreciation. Okay.
Yes.
All right, so that is it about this question.
Thank you.
So the company name is what? Mariam PLC. Cash settlement, right? Okay, so please, when is the accounting year ending for year 1? When is the accounting year ending for year 1?
31st March 2019.
So you have 31st March 2019. So you will have what? How many employees are they giving the share appreciation?
300.
So let's check. The employees are 300 employees. And they said that 5% of these employees will leave. That's the projection. It was estimated that 5% of employees will leave during the vesting period. Okay, so year 1, 5% will leave. So I gave you option. Either you calculate what? Your 5% somewhere. 95. So you'll have 300 multiplied by 5%. It gives you how much? Okay, so that gives you what? 15 employees. You can choose to do it that way. Then you can what? You come and less what? 15 employees here. Or somebody may decide that, okay, if 5% will leave, then how many will remain in percentage terms? Which is how many? 95% what will remain. Okay, multiply by, what is the share appreciation?
The share appreciation is 500.
The share appreciation is what? 500. You multiply by 500. Now, so when you are done, what is the share value? The fair value of what? Of the share as at 2019 ending is how much?
2019 ending. That is the 9 cedis we are seeing.
You multiply by 9, then you weight it. Since the vesting period is what? Is 2 years, then it will be 1/2. All right. So year 1 will what? 6, 4, 1, 2. So the final year, 31st March 2020. So you have 300 employees, and they said that those people who will leave had left. That's the final year. The vesting period had two. So that's the
Yes.
final year. So final year, how many people actually left? They said 5%, right? Okay, so 5% actually left. Then it will be what? It will be 95% left. Remain. You understand? Because they've already said it. All the employees who were expected to leave did leave the final year. So the final year is also 2020. And they said that 5% estimation will leave in year one. And in year two, which is the final vesting period, we don't do estimation. So assuming they didn't bring that line, here would have been 300 absolute without any deduction. You understand?
Yes,
Here
sir.
would have been 300 without any deduction. So final year vesting period, we don't estimate. But because they said the people who are supposed to leave didn't leave, the reason why we are deducting the actual 5% people who actually left. Then you multiply by what? The appreciation times fair value. What's the fair value of what? Of the shares at 2020 as what? As
11,
11
sir. 11, sir.
times the vesting price 2 over what? Over 2. So here will be 1, 5, 6, 7, 500. We are done here. After that, you will come and do your what? Your extracts. So this is cash settlement. So here we what? Your liability. Here one is what? 641,250. 6, 7, 500. Then you have here your staff cost, which is what? Year one, you spend all of it, and the year two, the difference between this one and year one and year two will give you that. Okay. We are done with the extract. So both the balance, system of financial position, and then the what and the P&L. So here now, this amount is what is what. This amount is what is due. Okay, so this is the liability at the end of the period for the company to pay the what? The employees. All right, so now let us come to what? Exercise rights. Now, the exercise right, how many employees remain? So here, in other words, you have what? Employees. Now, the total employees were how many? 300. And those who left were how many? 5% left, actually left. And the 5% on 300 will give you how many people? 15. So you have remain will be how many people? 285 people remain. Okay, so they also said that exercise rights. How many people exercise their rights? In the question, they said 2020, after the vesting period, 60 employees exercise their option. So 60 people exercise their option, right? Okay. So the 60 people exercise, if 60 people exercise their option, how many workers remain? So these people who are exercising their right, 60 people exercise their right when? They are exercising their right on when? Check the date. 31st March 2021.
2021.
So these people are exercising their right in 2021. And remember, they said that they exercise their right, the right option to exercise their right are 2 years, 2021 and 2022. So now, if 60 people are taking their money, how many people left? So you have what? They remain here to what? Here to exercise. There are how many? You have what? 285 minus 60. How many people? You have 225 people here to exercise. So these people will exercise their right when? 31st, 2022. Okay, so this is how it will look in your what? In your booklet. So here, so now you come and do your working. So you have your what? Your exercise right here. So you have your what? Your opening balance. So balance brought down. So what is the total liability for you to settle? 1,567,500. Okay. Okay. So this is your what? Your liability to pay. Okay. So Okay, so now cash settlement. Cash settlement will be how many people exercising their right? 60 people. Share appreciation is how much? Share appreciation is how much? 500, right? Okay, share appreciation is 500. And in the question, they gave us what? Intrinsic value, how much we can pay off. So let's come here. We can put the note there. Intrinsic value as at the date of us exam the rest 10 to 50 pesos. All right, so we'll come here. You multiply by what? 10.5. Okay, what do we have? So we are settling this money. Okay, so this is what we are going to settle. So this one is what? The first March 2020. So yeah, this is what we have here. Okay, so we have our balance carried down as at what? So this balance carried down as at 31st, 2020 will be how much? So you will have your what? The employees left yet to settle. How many are they? 225. We have 225 people who will take their money in the next what? In the next year, 2021. They are 225. And how much is the share appreciation? 500. And then what is the fair value as at 2020? So you go into the question. Fair value as at 2020. No, it shouldn't be 11. So it should be 2020. It should be 12. When are we exercising the right? They are exercising their right as at 2021. Sorry. Check that. Check it. They are exercising their right as at 2021. Sorry. It should be 2021 here. Check their question. Can't you see it?
Yes, it's there.
They are exercising their right as at 31st March 2021. So the fair value as at 2021, because the vesting period is as at 2020. So they can exercise their rights the next year. Okay. So the fair value as at 2021 is what? Is 12. Then you
12.
multiply. What do we have?
1350, 1.350,000.
You have your closing balance to what? 135. Okay, so here you have it. So you'll find the difference between this one and what you have there. That will give you what?
97500.
So this one will go to what? Profit and loss difference. So that is it. After you are done with the calculation, then you can say advice. Then you underline. And you say that based on the above calculation, Marian PLC. The accounting year ends when? 31st March 2021, right?
21.
All right. So you say that the above, based on the above calculation, Marian PLC shall account for the what is it? Shall account staff costs as at 31st March 2021 as how much? Watch here. Year one, where is it? The staff cost year one, then you will come here. The staff cost, then it will be this one. Have you seen this balance? The difference here, have you seen it? So as 991,500, 997,500. Because this one is as at 2021. These ones are what? 2019 and 2020. Have you seen that?
Yes, sir.
This one is 2019 and this one is what? 2020. You understand? Good. So, and we are reporting as at 2021. The reason why I'm bringing the figures like that. Please, have you seen it?
Yes, sir.
Thank you very much. So the staff cost as at 2021 will be what? 97500. And I had it from here. I told you that when you get to this point, we don't weight the values anymore. So the staff cost will be 97500. On 31st March 2021, 60 employees exercise their right. Therefore, an amount of how much are we paying them? 5,000 is going to, which is, how did we get it? Then you can quote the formula we did there, 6,500 times what? 10.5 shall be what? Shall be paid to them. Okay. When you are done, then you say, however, there remain 225 employees. Then you can put it in brackets. 300 employees minus 15 employees minus the 60 people who already took their what money shall have the right to exercise on what? 31st March 2022. The fair value of their shares is how much? The one that we just did here, where is it? 1,350,000. 1,350,000. That, right? How did we arrive at it? We took 2 multiplied by fair value of 12, fair value multiplied by fair appreciation. So this is the advice you will propose. Please, have you got it?
Yes, sir.
Thank you very much.